The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, everyone, to another edition of Breakout Investing on TFNN. Ken Shreve with you. Hope you enjoyed that interview Tom O'Brien did with the CEO of Harmony Gold Mining Company, CEO Graham Paul Briggs. Nice job, Tom. Happy to have you with me for this edition of Breakout Investing. 877-927-6648. You can catch my show 5 days a week on TFNN from 3 to 4 Eastern. If you can't listen live, head over to iTunes. You can pick it up as a podcast. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in TFNN.mobi. Open your smartphone browser, type in TFNN.mobi. Easy way to listen to the stream. And Tiger TV. The show is carried live on Channel 1 on the homepage of TFNN.com. It is archived on Channel 13. Tiger TV is also viewable on your handheld device. All you have to do is, once again, open that smartphone browser, type in TFNN.com. Over on the top right-hand side of the page, you'll see a box with some cell phones in there. Just click that box, and it'll start streaming right on your phone. All right, Tom and I like to joke a lot. When is the market not deviant? It's a deviant market, and right when it looks like you've got this increasing distribution in the major averages, and then, boom, you get a rally yesterday, and then more big gains today, fueled by testimony by Ben Bernanke in front of the Senate Banking Committee yesterday and today. You've got the NASDAQ Composite right now up 1.5% to 3175. What you have with the NASDAQ Composite here, as you can see, just a nice little bounce off the 50-day moving average. My take is that when you see high volume distribution in the market, we saw 2 days of it last week. We saw another day of it. A very bearish day of price action in the market on Monday. More often than not, that means something. It means that there are big sellers around. When you take that in concert with the overall weak action in a lot of market-leading stocks out there, the odds say the potential for more downside is there. Now, again, you've got a nice little rally for stocks yesterday and another rally today. Yeah, we can go on and talk about the fact that volume today is tracking lower than Tuesday. Right now it's about 10% lower on the NASDAQ and the New York Stock Exchange. Yesterday we had about 1.8 billion shares trade on the NASDAQ, so tracking about 5 to 10% lower than that right now. There's a chance it could pick up late in the day here. NYSE volume yesterday, 769 million. We're about 10 to 15% lower than that today. So, a lot of conviction behind the selling, not much conviction behind the buying for 100 plus years in the market. That has never jived. You can't have higher volume declines followed up by low volume gains. Basic laws of supply and demand tell you when that happens, you have sellers in control. But this market is going to do what it wants to do. So, still holding on to some long positions in the Ultimate Growth Stocks model portfolio. We have a short position as well, and in the end, we're going to have to watch the market, in particular, tomorrow and Friday, because if you start to see volume accumulation again, and all of a sudden the NASDAQ is starting to, retest that high from last week, you're looking at a potential breakout here. So any short positions that you have on, you're going to have to manage pretty carefully. So that is the NASDAQ Composite. Let's take a look at the S&P 500. We'll see that the S&P 500 never quite got down to its 50-day moving average. It's having a big day, up 1.5% to 1520. Call it 1520 for the S&P 500. pretty likely we're going to get a close near highs for the major averages. Highly unlikely that sellers are going to come into this market late. So fully expecting a close near highs here. S&P 500 up at its session high. And finally, let's take a look at the Dow, which is INDU. Take a look at the Dow Jones Industrial Average at its session high. Actually has broken out. It looks like cleared some resistance today that came about after the Dow declined sharply on Monday. Let's see what that price level was here. The high on Monday was 14,081. So the Dow right here, 14,101. So bullish day for the Dow, up 1.5%. Again, volume kind of an issue here. It is possible that volume could eventually come in higher than tomorrow. But again, we're just going to have to see how things play out. Next couple of days are going to be pretty important, I think, in determining which direction this market wants to go. Could be the classic head fake of all head fakes here. Apple's annual shareholder meeting came and went without too many headlines. They wrapped up their shareholders meeting today with very little mention of this $137 billion in cash and what it plans to do with it. CEO Tim Cook said the company's board of directors are having, quote, very active discussions, close quote, on Apple's big cash position. Great day for the markets. Apple has been lagging most of the day, and it is still lagging off its lows, but still down 23 cents to 448.74. Downtrend still very much intact with Apple. U.S. dollar index today down 0.3%. Last trading around 81.63. April gold hits a high of 16.14 an ounce earlier today, but ended up down at $19.80, 1.2% decline for gold. Settles at $15.95.70 an ounce. April crude oil up 13 cents, not much movement, settles at 92.76 a barrel. Yields slightly higher at last check, well off lows. The 10-year note at 1.9%, the 30-year bond at 3.10%. Let's take a look at some big movers today. We've got shares of LinkedIn up 7.3% today to 169.34. 169.34. Little mini breakout for LinkedIn. Evercore Partners comes out, reiterates a buy rating, raises its price target to $200 a share from $160. Of course, it wasn't that long ago when LinkedIn gapped up strongly. I think about 2 weeks ago, February 8th, when it was up about 26 points on the day on news that sales were up 81% to just over $300 million, earnings up 192% from a year ago. So very real growth story going on at LinkedIn. Evercore Partners has positive things to say about the company. Let's end here before we head into the first break, talking about the strength in the transports, bouncing back with conviction today. The iShares Dow Jones Transportation Index Fund up 3.2% to 106.93. We'll take a look at some transports on the move today. When we come back, you're listening to Breakout Investing on TFNN. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN, 877-927-6648. Let's head up to Ottawa, I believe, and the name is it Rodish? I think that I have that pronunciation right. How are you today?
Yeah, hi, Ken. Doing good. How about you?
Doing fine. Thank you very much.
Yeah, you're doing a great job. And I had a quick question on LinkedIn. Actually, I bought this stock when it got gapped up after the results at 148, and I sold it at 161, when there was a lot of distribution days. And today, as you know, LinkedIn, popped up pretty good, but the volume was not all that convincing. So do you think it's a good time to get back in or just wait and see what the investors are doing,
Well, yeah, actually, the volume is pretty good in the stock today. It is above average. It's not like the volume that we saw earlier in the month on February 8th and 9th, just after it reported earnings. But, LinkedIn normally trades about 2.2 million shares a day, and it's at 3.8 right now. So the volume is pretty good here. My personal take is that buying it right here is risky. On the one hand, it is clearing a swing point today of 165. It's trading at 169 right now, so the fact that it's breaking out over a swing point, some people would say that it's still within range. I would say if you do buy it between now and the end of the day, I wouldn't be afraid to, take quick profits if you get them. Is it breaking out of a base today? Absolutely not. It has only been, consolidating for about a week or something like that. So it's not a base breakout. It's not really a bounce off support. So I'm kind of mixed. I would probably say not buy it, but then again, in this type of market, when a stock like this is breaking out over resistance at 165, it could keep going. So I'm 50-50 on it. I wouldn't, but you do have another breakout today. So let me put it this way, Radesh. According to the buy rules that I follow, I would not be buying today.
Okay, great. And Ken, real quick questions, like for the last 2 days, the indices have been going up, but the volume is not very convincing. So do you think it's a fake start, or we still have some more downside days to go? I know it's difficult to answer that question, but I just think that this is some kind of a fake rally, like it just tells you to come in, but there may not be much of conviction, So,
well, and that's important to pay attention to. That is absolutely important to pay attention to. I think what is important to remember is that headed into this week, this was a market that was under distribution. Headed into this week, it was a market under distribution. And then after Monday's bearish session, it was a market under pretty intense distribution. So now you've got 2 straight days of gains for the major averages, and I'm here to tell you that 2 straight up days for the market are not going to change a trend. Now, if, tomorrow we're up another 1% and volume expands to the upside, that's when you're going to have to take a look at some index short ETFs, or maybe if people are short this market, I would pay attention to it. So what I'm going to do is just watch the market for the next couple of days. I'm going to watch what it does tomorrow. I'm going to watch what it does Friday. But even after a day like today, I still view this market as one that is under distribution, where the risk outweighs the reward. I'm still seeing very limited opportunities to buy stocks. I want to see the financials come in. The home builders were under a lot of distribution. They're starting to rally back. I'd like to see them base for a longer period of time. So I'm still looking at this as a market under distribution. I don't like higher volume declines followed up by lower volume gains. There aren't any technicians out there that would say that's healthy action. So let's see how things play out over the next couple days.
Okay, thanks, Ken. I think last time I heard you was in IBD workshop in 2007.
Oh, wow.
It's good to hear you again. You have done a tremendous job. I remember when you used to do the daily commentary in IBD. So, great insight, and I'm a subscriber to your newsletter. A lot of good ideas on Equinix and all. So, great job,
Well, thanks very much for the comments, Radesh. Appreciate you listening, and don't be a stranger. Feel free to call anytime.
Okay, thank you. Bye-bye.
Okay, bye-bye. Boy, IBD workshops back in 2007, that seems like ages ago, but only 6 years ago. Yeah, I used to do a lot of investment workshops with IBD. So thanks very much to Radesh for those nice comments. In terms of LinkedIn here, listen, it's breaking out over a swing point today. This is a deviant market. It could continue higher. Obviously, sentiment very positive around LinkedIn, but again, buying a stock after it consolidates gains for about 4 or 5 days, I'm just not a big fan of doing that. All right, the transports. We were going to talk about the transports. Big day for the liquid ETF IYT that tracks the transportation sector, up 3.2% to 106.94. Some big movers in the transport sector today. I didn't see any news on Kansas City Southern, which is pretty amazing because here's a stock that is up 6.5% today to 104.24. Another very extended stock out here. The last breakout for KSU was when indices broke out on January 2nd earlier this year. That is when it broke out over about $85-86 a share. At 104.24, it hasn't really built a base. It's extended, so you don't want to chase this stock up here. And another big mover in the transportation sector, let's talk about J.B. Hunt Transport Services, trucking firm. Nice little breakout for J.B. Hunt today. Up 6.1% to 70.41. This stock got an upgrade from Avondale today to outperform from market perform. Avondale cited improving intermodal volumes and pricing. Avondale raised its price target to 80 from 60. So that is a look at J.B. Hunt Transport, and you have a stock here that is trying to, break out actually over a swing point of 69.60, and it to me still looks like it's within buying range here. So J.B. Hunt having a good solid day. Another big mover today would be Biogen IDEC. BIIB. We're supposed to hear about FDA approval soon for its oral MS pill BG12. Biogen got an upgrade today from Canaccord to buy from hold. It is up 3.1% to 167.05. Economic data today, we had a slew of it. Durable goods orders for January down 5.2%, a little worse than expected. That was after a gain of 3.7% in December. Excluding transportation, durables up 1.9%. That was much better than expectations of a 0.2% gain. Pending home sales for January up 4.5% in January. That's according to the National Association of Realtors. Above expectations for a 3% gain. Healthy sales gains in all regions of the U.S. except the West, but keep in mind in the West, very few distressed properties left out here, so very, very tight supply, nothing left to sell, in other words. So pretty good pending home sales data earlier today. Tomorrow we've got weekly jobless claims expected to fall 2,000 to 360,000. The second estimate to fourth quarter gross domestic product expected to come in after an initial reading of minus 0.1. Look for growth of 0.5% this time around. Chicago Purchasing Managers Index also due Thursday, expected to come in at 54 from 55.6 in January. All right, taking a look at some earnings reports today. Let's check in on First Solar. Not a good day for First Solar. Actually had been in rally mode last week, and here we are headed into earnings. It was down 5 days in a row. We mentioned this one yesterday, down 14% today. Wow, $26.92 last price for First Solar. They made $2.04 a share, well above expectations. That reversed a year-ago loss. Sales up 63% to $1.08 billion, but that was below expectations. Company also withheld its guidance for the full year due to lack of earnings visibility. Pretty good numbers from Jazz Pharmaceuticals, J-A-Z-Z. Jazz Pharmaceuticals, let's check in here and see that the stock is up a little more than 2% to 58.05. Finding some support at its 50-day moving average. Earnings up 31% to $1.53. That was about 11 cents above the consensus estimate. Sales up 120% to $183.7 million. That was in line. Just over 60% of the company's sales came from its basically its flagship drug Xyrem, which is used to treat excessive daytime sleepiness in patients with narcolepsy. Sales of Erwinaze totaled $34.4 million. Jazz acquired this drug when it bought EUSA Pharma last year for around $700 million. Erwinaze is used to treat acute lymphoblastic leukemia, typically found a type of cancer found in children. And a discussion of earnings would not be complete without checking in on Priceline.com. Another solid quarter from this large cap online travel firm, up 3% today, off its highs, last trading at $6.99, hit an intraday high of $709. Excuse me, the intraday high was $712.50. Now trading at $6.99. Better than expected showing in Europe. That was the good news. Earnings up 26% to $6.77 a share, 23 cents above the consensus estimate. Sales up 20% to $1.19 billion. That was mostly in line with expectations. RBC Capital Markets reiterated its outperform rating on Priceline, but they did raise their price target to 900 from 770. So a big lift in price target there. Jefferies also maintained its buy rating and raised its price target to 820 from 780. Take a look at TripAdvisor, kind of it's not the same business as Priceline, but same industry group. TripAdvisor up 4% today to 45.46. Working on a nice little cup with handle base here, swing point of 49.35. They are an online provider of trip advisory services here. I think I've got a weekly chart that's going to show this cup with handle pattern. Let's see. TripAdvisor, there you are. Okay, here's TripAdvisor. You can see a big cup with handle pattern here, and then the swing point is going to be the high point in the handle area right here. So this is one that you can watch for an upside breakout. You want to see good volume expansion at the breakout, but the swing point to watch here again would be 49.35. Some other earnings reports on my radar today. Dollar Tree, DLTR. Nice move for Dollar Tree, up almost 11% on the day to 45.55. Earnings up 26% to $1.01. That was better than expected. Sales up 15% to $2.25 billion, mostly in line, just a hair better than expected. Same-store sales up 2.4%. Let's also check in on Joy Global. Joy is, no, that's Joy. Let's see here. Joy, there it is. Joy Global. Still underneath its 50-day moving average here. Joy Global had been under a lot of selling pressure. Not a lot, but had been under selling pressure ahead of earnings, but rallying back today, up 6% to 63.54. Like I said, still underneath its 50-day moving average, so still technically challenged here, but earnings up 4% to $1.31. Estimate was for $1.14. Sales up 1% to $1.15 billion. Estimate was for $1.08. And then a couple of retailers here we can check on. And we'll see that Target hits an intraday low of 61.68. It is up off its low, now trading at 63.19, still down 1.3% on the day. Target is about to open its first store in Canada and plans a significant expansion in the country. There's worries about cost and how that's going to, impact earnings going forward. So some sellers in the stock today, but the earnings up 1%, excluding items, to $1.47. That was mostly in line. Sales up 5% to $22.4 billion, a little bit below expectations. Same-store sales were flat in the quarter. And TJX companies, that's TJ Maxx, Marshalls, nice bounce off the 200-day moving average today, up 2.5% to 44.76, showing good, strong technical action, good volume in the stock today. Earnings up 32% to 82 cents a share. Sales up 15% to $7.72 billion. Both bottom line, top line growth slightly better than expected. Same-store sales up 4%. Same-store sales up 4%. Salesforce.com. We're going to hear from Salesforce tomorrow after the close. Let's see how this provider of on-demand customer relationship management software, looking a little vulnerable here, stuck underneath its 50-day moving average, rallying back today a little bit, up 2.5% to 167.37. We're going to hear from CRM after the close tomorrow. Before the open tomorrow, Catamaran Corporation, acting very well, high-quality company here, expecting to see good numbers from Catamaran, provider of pharmacy benefits management services. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. 877-927-6648. Let's head out to Tallahassee, Florida, talk to Ben, who wants to talk the Dow. How you doing, Ben?
Hey, great. How you doing, Ken?
Doing all right, thanks.
Outstanding. A quick question. I believe you look to confirm volume 3 or 4 consecutive days with each having higher volume. Is that correct?
When you mean when you're looking for follow-through or signs of a new market uptrend?
Yeah, I'm looking at the Dow, and it looks like it's quite a bit less than today. And I'm just wondering if you would say that this would not be part of a legitimate breakout because of that?
Well, no, it's definitely not a legitimate breakout for the Dow. The volume isn't there.
Right.
I have a look at the weekly chart for the Dow in Tiger TV. Now, you do have several weeks where the Dow was, showing some tight weekly closes, and so technically the Dow, is looking pretty good here on a weekly chart. The 50-day moving average is referred to as the 10-week moving average, and the Dow all the while has been holding above the 10-week moving average. It is breaking out today. It did clear a swing point, but it's just one of these low volume breakouts that you just have to take with a grain of salt. You still there?
Yeah. Hey, sorry about that.
Oh, okay.
Yeah,
No
I
problem.
just wanted to, because obviously the last 2 days being up 400 points, I just wanted to get your take because you seem to have a really good pulse. I mean, obviously I try everybody's systems, and I try to compare the systems, and I thought from a momentum type, investment strategy, I really liked the consecutive days up, but with higher volume in each day. And today, I just wanted to get your take on how you would assess that.
Yeah, I mean, listen, you look back, last week. I mean, there were some trading days in the Dow, basically starting on February 20th last week. You just had higher volume declines. You had erratic, volatile price swings, including on Monday, where you had the outside day of all outside days in the Dow. And then you just see a low volume rally on Tuesday, and you see another low volume rally today. So it really is hard to put a lot of faith in this. But, for people that are short this market, we're going to have to just watch the market tomorrow. If you see some volume expansion to the upside, you can't get too married to short positions. I mean, that's what the market is telling us over the past couple days.
Yeah, Okay, so you're not completely sold on this breakout, I guess. I just really know kind of my confirmation.
No,
okay.
I'm not. I think, again, headed into this week, this was a market that is under distribution, and 2 straight up days isn't going to change that. But again, if we see more bullish days for the market tomorrow, we end the week with a bang, then we may need to reconsider things. But still not convinced yet.
Good. Hey, thanks a lot, Ken. Keep up the great work.
All right, Ben, appreciate it. Have a great one. Yeah, I mean, it's funny. When you look at a weekly chart of the Dow, it is in a bullish technical structure. The issue here that we have is just, again, you look on a daily chart for the Dow, and why don't we do that right now? INDU. And you just see a lot of erratic volatility over the past 6 trading sessions, and after the big gain since the mid-November lows, when you start to see erratic wide and loose price action like this, especially on the daily chart, and again, I go back and look at this day, Monday, for the Dow. It was an outside day, very heavy volume distribution, so we just got to see how this plays out over the next couple of days. All right, coming up after the close today, we're going to keep an eye on some earnings reports. JCPenney, Limited Brands, Monster Beverage, Groupon, all set to report. Coming up next, the Tom O'Brien Show. See you back here tomorrow, folks, 3 o'clock Eastern, for another edition of Breakout Investing. Take care.